I'm wondering if you can tell me a little bit about stress testing.
In the wake of the financial crisis, regulators imposed stress testing requirements on financial institutions as an attempt to fight the next war. Global Association of Risk Professionals and SAS Institute partnered on a survey in the middle part of this year. People in the field, both risk practitioners and executives they are working with or for, we found that people who are really in the trenches, the practitioners who are working on the stress test processes, have a fairly positive view of what they're doing. It's not usually what we see.
We see a real difference between companies that are a little bit more mature. The other end of the spectrum, you have sort of the smaller banks, new entrants from things like Dodd-Frank. So they're not quite as far on this maturity curve. There's a difference in perception still between the practitioner set and the manager set. I think some of the folks in the trenches, they may also look at a very narrow band of this. I think data has always been a challenge. We know from working with banks very closely over the years, data has always been a big piece of this. And what we've seen now working with smaller banks is that they often don't have historical data that is really robust. So often data or the lack of data for smaller organizations becomes critical. And the same thing with technology. They may not have invested as much in technology.
I think we see a legacy of siloization in these financial institutions where it's difficult for them to share information or have a single version of the truth across all departments.